How's it, fellow traders? Welcome back to FX Rhapsody. Today we're looking at two currency pairs again. We're going to be focusing on the British pound, Japanese yen, and then also the US dollar, Japanese yen. Before we hit the charts, go visit my website. It's on the bottom left corner over here, where you can find previous analysis on my on these pairs. You can find many more videos regarding trading. Also, for those of you that's starting out on trading, go visit. There's some nice video categories. Also, we're doing the COT reports when we do our analysis over the weekend. So just go download it on the resource tab. It's for free, where you can use it. And then also preferred brokers, guys, go check them out. These guys are really brilliant. I've been struggling for years to get the perfect broker, and I've really stuck to these guys for the last couple of years. Okay, so let us hit the charts. So we're looking at the British pound, Japanese yen first. We're doing top-down analysis like we do every weekend. We're starting on a daily, moving down to the hourly. With my trading, I'm trying to simplify trading as much as possible. Not too much fuss around it, and just, pinning out some areas and just looking at not predicting too much what price is going to be doing, but just reacting to what price gives us. Right, so on a daily time frame, what we can see is we look at some liquidity that's been taken out. So first of all, we saw this was the previous or the closest liquidity area. We saw that price was taking, or liquidity was taking out on that low, and then we look at this low as well, and we can see that that low has been taken out by the British pound or by price, and then going into that area and then just pulling back and looking at where price is going to be going. We do have a little bit of a structure that we are looking at. I'm just going to highlight it. It's right about here. So this is an area in the market that's very strong, as we can see. Just doing that, and price has not been breaking through it. So you had it, price coming up, bouncing around it, acting as a resistance area, then coming up, supporting that area. And as we can see, price not quite breaking through that area yet. So we're waiting to see if price is going to continue downwards, or just respect that area and then continue going up. Let's go to the 4-hour time frame and see what it gives us. Just maximize it or make it a little bit bigger so we can see. So again, price going up, looking at, it's just consolidating a little bit. We are looking at, it's not even halfway through the month yet, so we need to see some movement in the market. We do have an area over here that I'm going to be highlighting. So that's an area of liquidity that's not been taken out. So this low has not been taken out by price. And then we're also looking at that high. It's also, still intact. So price just in between those two areas in the market. As we could see, it's a high and it's a low, and just not moving too much in that. If we pull out our Fibonacci from this swing low over here to that swing high, we can see that price came in and it touched this 62% area, as we can see over there. So that's always a key area. This whole area over here between the 62 and the 79 area, this is where you're looking for entries in the market. And this is a swing trading entry. So if you are still in the price, so price came down, hitting that area in the market, and then we could see the price going up, still not going past that previous high, and then just hovering in between these areas. Coming down again towards the 62, not quite touching it, and just, like I said, it's just moving in between those areas. Looking at the hourly time frame, let's see what we can see here and what happened in this week that was past. We had a couple of nice news events that happened, and I'm just going to show you. So we had a nice run in the market, consolidation, coming down again, right? So I think it was previous week analysis, we had this line that was drawn over here. That was the area that we were looking at, price going past it, and then we had a nice little low over here as well. Okay, we were just looking at those previous highs and previous lows to see what price is going to be doing in between those areas. So price obviously running past that area, going into past that liquidity, just tapping into that liquidity, coming down again, and then just zooming in a little bit. I just want to show you a little nice little entry, a short-term entry. But I mean, you can see that with this candles formation, there was a nice small little fair value gap that was created in the market. So price going past it, pushing into that, and then selling off downwards. So that was going to be a small little move that you could have caught. But again, price is going up again, moving up, still liquidity, these liquidity areas still intact. This previous high is still intact in the market. So we could see this price just consolidating a little bit after that big news event, running, and again, just pushing downwards. Then eventually we had this low over here. I'm just going to extend it a little bit. And as you can see, price just pushing past that area, just tapping into that area over there, and then starting to run up again. And with this little run up, you could see as well, after tapping into that liquidity area, creating a nice little fair value gap. And I'm just going to highlight it out for you. And again, that's an area price just gets drawn towards. So all these little fair value gaps in the market, these imbalances of these candles, price gets drawn towards that area. And currently we could see price just hovering in between that area. Now with this big movement down and then going up, there was a nice retracement, and how you could have caught a nice little sell downwards. I'm just going to show you here. So you had your Fibonacci going from that high to that low over there, and as you can see, price just going down and going up, retracing, touching that area, and again another nice little trigger of a sell, tapping into that 62% line, and then you could have sold your sold down towards the last end of this week and catching a nice little amount of pips. So always be aware of these little areas. There's just two little methods: looking at the fair value gap, looking at your Fibonacci, just to see how price, especially with this big runs like this, you know, you have a big run downwards and then creating a low and then coming to retrace. You have a high, you have a low, retracement downwards. So again, now price is just consolidating within that area. And then, like I always do, I just like to create a little high and a little low. So I'm just going to highlight this area in the market just to see if price is going to be going past that area in the low, or that low in the market. And I'm just going to highlight this area. So I'm just going to make it a little bit longer and then doing something like this. So I'm just going to be focusing on these two areas in the market to see what price is going to be doing. Will it go past this area, taking out some more liquidity at the top, and then will it break the area downwards? So if we look at the COT reports, we're going to be focusing on the British pound. Obviously, it's the British pound, Japanese yen, British pound first. So you can see in the British pound, it is definitely getting stronger. Okay, as we can see this movement going up. So lots of longs being opened in the market, lots of shorts being closed. So you can see that negative, or the net position, going from a negative 56,000 going all the way up to a negative 34, almost 34.5. So you can see that movement upwards. And then looking at the Japanese yen, what we can see is also getting stronger, definitely getting stronger. So we have Japanese yen going all the way from a negative 110,000, moving all the way now to a negative 25,000. We have spoken about this, how the Japanese yen, we will be expecting it to get stronger. So let's have a look in the market. So currently, both the British pound and the Japanese yen getting stronger in net positions. So that is why we're just seeing price just consolidating a little bit in this market. Okay, so that is all from all for this pair. Let's move on to our next pair. So we're going to be looking at our USD dollar, going first to the daily, moving down to the hourly. So on a daily time frame, I'm just going to highlight it, or just zoom in a little bit more. So on a daily time frame, what we can see is, again, price is moving downwards. So as we can see that let's just go look at our COT reports first. So as we can see, the Japanese yen getting stronger, definitely. And that is why we see this movement downwards, because as soon as the Japanese yen gets stronger in the COT reports, we do find that price will be moving down, seeing that we using it or looking at it against the US dollar. So we see this movement downwards. Will it continue down? We will have to have a look. So first of all, we could see let's have a look at this fair value gap that was created. So we have the structure in the market. Okay, let's just draw the structure in. Okay, right there. And as you can see, price breaking that structure, creating a fair value gap in the market. You know, right there. That's our imbalance. Price going down, moving up again, getting pulled, or getting hunting that area, getting pulled towards that fair value gap area, and then it moves down again. So we're looking at, let's have a look at our Fibonacci. So we have a little bit of a pullback and going down, and then just strange enough how price just, you know, it all depends on if price is going to be going downwards or upwards. But with that little pullback, you could have caught a little bit of a buy upwards, you know, into the 62% area. But again, let's have a look. Let's see if the Japanese yen strengthens more and then carries on downwards, or will the US dollar, you know, continue upwards. Let's go to the 4-hour time frame. 4-hour time frame. Now this is very interesting. I'm just gonna take this out before we look at that. I just want to show you. So we have got, like I told you just in the previous one, we've got the fair value gap at the top here on the daily time frame that had moved upwards. All right. So now let's look at how price reacted, because I'm just gonna do this because of the Fibonacci that I just pulled in. Let's pull in that Fibonacci. So we pull it from that low to that high. Okay. And as you can see, that's a movement low going high. So swing low, swing high, price going down into the 62% area. Where does it go to it, and what does it hunt? It hunts fair value gaps, guys. So this was a nice fair value gap that was created in the market because of this big push upwards. And you can see that imbalance in the market. So price going up, and then with a swing low, swing high, pull the Fibonacci. Where does it go to? 62% area, fair value gap area, and then you take a nice little buy upwards. And if you managed to get into this area, you would have been 150 odd pips strong already in the market. Don't like holding my trades over the weekend, but I mean, for those of you that did, you know, you could still hold and see what happens next week. Hourly time frame, lots happening in the hourly time frame. We did see lots of movement. Okay, so I'm just going to zoom out a little bit, because what I want to highlight is, first, we saw this movement downwards and we saw this area going downwards. Okay. Now we have got what we did see is a consolidation at the bottom. We saw price moving up and then coming down. With this movement up, I'm just going to highlight again and just making for you this area. You see that? That's a lot of bull candles, bearish candles within the bull. That creates a little structure in the market. All right. So with the structure being broken in the market, what happens? It creates a fair value gap. So you can see that area being broken in the market. Zooming in a little bit, I just want to show you. I'm not trying to complicate it too much, guys. So that's a fair value gap that gets created in the market. So price going up, retracing back into that fair value gap, and then we see movement to the upside. Okay, so it carries on up. We have a big news event that happens. Price going into that area. Why does price move so drastically into that area? Because of this. Look at this. There's a fair value gap that was created on the top there. And what happens is price gets drawn towards those fair value gap areas. And look at that, how nicely it moves into that area. So if you had placed a buy over here, I would have left my buy, because you could see price going down a little bit more. Okay, pushing into that area again. I'm just going to extend it. Right. So you had a break in structure. Price gets drawn into that fair value gap, going up, going down again. Second entry that you could have taken, because we are looking at this area in the market that price going into. It gets drawn to those fair value gaps in the market. Right. So as soon as price got there, it started consolidating, and then we had a big move to the downside. How could we have taken that area, or that little sell downwards? All you had to do was take your Fibonacci from that swing high to that swing low. Okay, I'm just extending it a little bit, and as you can see, price going nicely. I'm just going to take this out because it tapped into that. So price gets drawn nicely into the 62 area, guys. It's not rocket science. Okay, swing high, swing low, price consolidating up, and we were expecting a nice move downwards because of this big move upwards of the news event. Another news event happened, and price moving downwards. So gets price retraces back to the 62%. It starts falling down. Okay, there we go. So you could have caught a nice little upwards buy on here, and you could have caught a nice little sell downwards towards the end of the week. right? Now currently we have price going up again. Not sure what price is doing. As we saw on the COT reports, we do have the Japanese yen strengthening, but it is also at an area that, you know, we could see Japanese yen going up again because of the US dollar getting stronger again. But again, two areas in the market that I'm going to be highlighting. This is big areas, especially on the hourly time frame. I don't like looking at big areas like this, but we do have this low that we're going to be focusing on, and we do have currently the swing high. Not quite of a big swing high. Price might just break that area, but again, once it breaks that area, we're going to be looking at some little bit of gaps forming in the market, because as you can see here, you know, it always happens. Okay, these fair value gaps, these imbalances in the market, they always happen. Simple little example, you know, right there, structure gets broken, price going up, price retracing, going up again. I mean, why did it retrace all the way there? Because it retraced back to this area in the market. Zooming in a little bit, you could see a little bit of an imbalance in the market. Fair value gap gets created, price going into that and then shooting up again. So it happens all the time, guys. It's simple, easy, nothing complicated towards that. So that's all from my side, guys. I hope you enjoyed the analysis. If you did, don't forget to hit that like button, hit the subscribe button, notification bell. I'm definitely doing some more analysis into this weekend. Guys, I hope you are staying safe and happy trading, guys.